Choosing your health insurance doesn't have to suck. With Mike Anderson, this week on the Extreme Personal Finance Show. All right, so if you're anything like me, choosing a healthcare plan is like stressful and kind of confusing. Well, today I'm joined with Mike Anderson. He's the owner of Anderson Benefit Partners, and he's an expert in health insurance. And I'm really curious how Mike is going to break down and simplify these crazy, complex decisions around your benefits. We're going to do things like navigate, open enrollment, some of the plan changes. There's actually some pretty crazy changes that are happening, and how to avoid some hidden traps in there. So I'd like everyone to welcome Mike Anderson. Mike, thanks for joining me today.
Thanks for having me, Chris.
Absolutely. I mean, I will say insurance probably isn't my favorite topic to talk about, but it's a necessary one though, right?
Yes. And you're not alone. It's most people's least favorite thing to talk about. And sometimes we get in the habit of giving it that same amount of attention, right? As we don't give it enough attention. And I help our clients make informed decisions and kind of try to simplify the complicated.
I love that. And so usually every year there are changes that kind of catch people off guard, right? Mm-hmm. And I know we've got some pretty crazy changes happening, at least here locally in Minnesota. And it's kind of timely because actually just today we learned that one healthcare provider, UCare, is going to shut its doors. And they service like 300,000 people in Minnesota and Wisconsin. So if I have UCare as my insurance provider, I'd kind of be freaking out a little bit, right?
Yeah. Well, so to make that even maybe one step more complicated, in late September, so UCare has individual family plans for people that are under age 65 that buy their own insurance. They also had a Medicare Advantage plan for seniors or people who are eligible for Medicare. And then they also do like servicing for the county or state public programs. Well, in September, they had notified the public that they were closing their Medicare Advantage plan. So that was like about 180,000 Medicare beneficiaries that were losing access to their plan through UCare because their plan was closing or they were going out of business for that part of their plan. Now, to date, they had said, until today, they were saying, yep, our individual family plan is still solvent. We're still going to operate. We're doing all those things. And then today, whammy, they say, oh, nope, that's not going to happen. Medica is going to take over our plan. So what it sounds like is Medica is acquiring the individual family plans at UCare. So UCare members will become Medica members, but there's still a question mark, I think, on the time frame when that happens. So the acquisition is supposed to happen in early 2026. So everything that I saw today says that UCare members are still UCare members through 2026. That if you have UCare, you'll still use your UCare card through 2026. During open enrollment, you can still select a UCare plan. I don't know that I would recommend that necessarily, but right. It's still going to be, sounds like they're still going to be functioning through the next year.
But how would that, I'm just kind of curious, and maybe we don't know the answer yet, but I wouldn't think that the plans, like if all of a sudden those individuals, like let's say you're a family plan like me, right? I'm self-employed, I buy my own plan, and now I'm now going to be a Medica customer from UCare. Plans aren't like apples to apples. Like, how do you know you're going to go to the right plan? Or would you just have to evaluate the plans and enroll just like you would any other new plan?
Right. So generally speaking, they'd call that like a crosswalk, right? Just like your plan now, it can change every year. Sometimes carriers will sunset or end a plan and they would crosswalk you into what's most similar. My guess is that whenever they merge the actual block of business, if you will, whenever they take the UCare members and turn them into Medica members, they're going to put them into whatever they think is closest to your existing plan. But to your point, networks and benefits are different. So for most people, they're going to want to at least reach out to their broker or whoever they're advisor is to help them make an informed decision to make sure that whatever their plan turns into is what they should be on.
Yeah, totally. And I do want to talk a little bit about how people can start to compare plans, side by side, and what things people can look at when they're comparing the plans. But I think it's really important, and something that I learned too, is the importance of leveraging someone like yourself, like a broker.
Mm-hmm.
Explain a little bit how that works, because I think it's like, I didn't really realize too that it's not like you're going to pay more or get different kinds of plans going through a broker. Can you explain that a little bit?
Yeah. So in our under age 65 marketplace, so if you're shopping through MNsure in another state through like healthcare.gov, all of the insurance companies have to file their rates with their state's Department of Commerce, who regulates insurance, right? So when our insurance companies file those rates with the state of Minnesota, they're filed with a broker service fee. If the person doesn't use a broker, the insurance company just keeps the fee. But if all is equal, right? If you and I are working together and you work with me and we land on, whatever plan you enrolled in versus you doing all that work on your own, you pay the same. So the job of the broker is really to help you navigate through all the noise to make sure that you're picking the right plan for you and your family for their coverage here.
I love that. So let's talk about that a little bit. Like, for families, what are some features or some things to start with when you're comparing those plans, right? Is it just out-of-pocket maximum? Is it deductibles?
Mm-hmm.
Is it prescription coverage? How do you start walking those families through those decisions?
Yeah. So we would go through a questionnaire, but I think it's really important. One thing that's different in the individual family plans versus like employer coverage is the networks are vastly different. So if you're enrolled with a Blue Cross plan through your employer, the Blue Cross name doesn't mean a whole lot, or translate, if you will, into from group to individual to Medicare. So the provider networks are all different. So we always start with, where do you like to go to the doctor? Because if you are, if you have a relationship with a provider, you might not want to change, right? You might want to not have to change your doctor. And in families specifically, if you have providers across multiple healthcare systems, that can get pretty complicated. So if you go to Fairview and Allina and Health Partners, and if you want to go to Mayo, you can be in tough shape in the individual family plan market. So we always start there and then talk about household income, because that can play a factor in if maybe you qualify for a tax credit, and how do you use your health insurance. Do you doctor often or not so much, or do you like to see maybe a counselor or therapist? That can play a big impact in to how somebody would maybe share in the cost, whether that's a copay or towards their deductible, and then prescription drugs. So we want to review all of those things and then give somebody a few options that they can make an informed decision on what maybe is going to fit them the best.
We keep on hearing, and it's all over the news and it's everywhere you look. People are using these GLP-1 weight loss drugs, and sometimes they're like $1,300, $1,500, $1,700 a month. And just today, the owner of one of them, I can't remember, said, "Oh, we're going to offer it for $200 a month." Maybe you have a chronic care condition, or you have a very expensive prescription that you'll continually use. Mm-hmm. What are some of the main things you're going to look at, like out-of-pocket maximum or something like that?
Yeah. So depending on the plan, those prescriptions may be subject to deductible and coinsurance, or they may be just subject to a copay. So depending on the type of plan, we'd want to know in advance, how that person's cost sharing would be applied. So we'd show that somebody, if you did X, this is what your prescription drug costs would be every month. If you did this other type of plan, maybe it's a different type of cost sharing. The GLP-1 drugs are a whole other animal, because there's a lot of people that take them. Mm-hmm. To my understanding, they're only approved in the individual market for a diabetes diagnosis. So you have to be diabetes type 2 to get the drugs covered underneath your health plan, as a general rule.
Got it. Okay. we keep on talking about all these changes that continually happen, and we talk about it, on the podcast. I've had several episodes. We also, I do meetups in person, like monthly meetups where I have people get together at our Stacking Benjamins meetup group, and we talk about inflation, we talk about rising costs, and insurance always comes up. And so these deductibles and out-of-pocket maximums and everything keeps creeping up. What can we do about it? I mean, I guess I'm asking, is there anything we can do to help combat their just insanely rising costs?
Yeah, and it's this year. It was crazy before, right, Chris? I mean, it's been this road of like madness in our health insurance. And this year, you look at our local market, and all the carriers filed between 20 and 30% rate increases. Crazy. I mean, and you look at like a out-of-pocket maximum on most of our plans, and they can exceed $10,000 for an individual. There's a lot of families out there that's just functionally uninsured. That if you got sick or hurt, you'd never dig out of just your out-of-pocket expenses for 1 year.
Sure.
Right? So, depending on who you talk to, and our insurance rates are filed through the state of Minnesota. So the state of Minnesota has to validate that the increases are adequate or reasonable, I should say, for the insurance companies. So I think people are utilizing more care, and the insurance companies all are looking 2 years in the rearview mirror, right? Mm. So I think they're still looking at claims that are kind of post-COVID catch-up.
Sure.
Where, everybody kind of came back to real life. So there's an influx in overall claims. There's new drugs like the GLP-1 medications that are more expensive that people are requesting to take. Treatments for cancers or rare conditions are really expensive, and there's a ton of other drugs that are really expensive. So all those factors, right, are an increase in cost what we pay to our insurance premiums. Then you take into consideration maybe like our federal legislation, where in the individual market we had all these enhanced tax credits that are now expiring at the end of this year, and the local markets as well as nationally, they're expecting, because of that increase in cost, that 20% of the market will fall out, right? That the people are just going to say it's too expensive, I'm not going to take coverage. So the actuaries all account for that in their next year premiums. And so that's how we end up at like this 30% rate increase. It's, I think that we're at a tipping point where how much more are people willing to take before the whole thing falls apart? Right.
Yeah, and just to confirm, when you say individual plan, that's something that's not offered by your employer, for example, right?
Correct. Yep. So if you're under age 65 and you buy your own health insurance, now where that could get confusing for somebody, right, is if your employer offered an ICRA or a QSERA, a benefit allowance for you to buy your own individual plan. Sometimes those are acquired through work, but you're still in the individual market.
Oh, interesting. I didn't realize there was that type of arrangement there.
Yeah.
Interesting. So in some of the changes, one thing that I realized too is that there was some changes to like HSA plans coming in 2026. How has that changed? And then most importantly, how do you think someone should kind of choose between a lower deductible plan and choosing an HSA plan? Is there a good rule of thumb on how to evaluate that?
Yeah. Well, so to unpack the first part of your question, so inside the One Big Beautiful Bill, they changed the requirements of an HSA plan. So previous to 2026, to have an HSA qualified plan, the plan itself couldn't provide first dollar coverage if you got sick or hurt or taking prescription medications, right? You had to fund the entire deductible, and that's what made it HSA qualified. In 2026, all bronze level plans through the exchange are considered HSA eligible. So those plans are the bronze plans, generally speaking, are going to have like your higher deductibles, higher out of pockets. But what, some of the plans in that category can have copays for office visits or prescription drugs. So you get more first dollar coverage, if you will, that before would have kicked that out of being compliant with a health savings account, where now you can have an HSA qualified plan or an HSA account to go with the plan.
Got it. I mean, if you are relatively young and healthy and want to use, because I've talked about HSA plans a lot on the podcast, about this triple tax advantage secret retirement account, right?
It is.
I guess, is that kind of the thing? I mean, one exercise I did is kind of go back and looked at, well, how much did I actually pay in healthcare over the last couple years? And I broke it out, per year. I mean, is that some of the things we can do to figure out if an HSA plan would work for me and my family?
Yeah. So, like previous to this year, it's always been the HSA plans generally were the lower cost insurance plans. And I guess I'm a pretty firm believer that your insurance, if possible, should not have a hugely negative impact on your standard of living, right? It's, I would hate to have somebody go into a plan and think that, well, I need to have this really rich benefit, but then if it's going to have a really negative impact on your life, well, maybe we should look at affordability first, right? So the insurance shouldn't change your lifestyle if we can help it. So I would always start with affordability, and then it's understanding how the person uses their insurance, or what would they like to do, what are their planned events, and then picking a plan, and you can kind of math the system, right? We can determine, would you be better off saving on your insurance premium? Maybe, that you're going to spend less, but then maybe using some of that savings towards like an unplanned office visit. Or if you know that you're going to go, or that you see a counselor or therapist, maybe it makes sense to be in a plan that offers first dollar coverage for office visits or your prescription drugs, etc.
Right. I just think it's so crazy that the cheap plan can have like a $9,000 deductible or something crazy, right?
Yeah. And none of it's cheap.
I know.
And none of it's cheap. Yeah.
It's amazing to me. So I've never really thought of my healthcare needs in the future, what I can plan for. So you mentioned like, oh, well, maybe if there's something you have planned, like how much you kind of budget, how much that's going to cost. What are some things people can think about as a planned, I guess in my head, I'm thinking maybe like go to the eye doctor or something, but is that different insurance? I don't even know. In my head, I think of the doctor as always something, you get hurt, then you go. You get sick, then you go.
Yeah. Sure. Yeah. So when you're talking about like planned events, so like depending on maybe somebody's medications that they take, they might have to visit their doctor like semi-annually or quarterly to do like a medication review, right? So that could be something that that you're going to have to go to the doctor for.
That makes sense.
It could be, if you're like in some sort of like therapy, that could be like occupational therapy or physical therapy where that you're going to have to doctor X amount of times per year. It could be something like that. Think of somebody maybe with like durable medical equipment. They might have the same projected costs each year. So to understand like some of those things can help us project maybe what plan would be the best for them to be on.
Got it. So one thing that you mentioned earlier was about employers. And I know that I do have listeners and people that watch me on YouTube that are small business owners. Maybe they have, a dozen employees or whatever. Do you see that there's trends that those employers are adopting to help manage the rising costs of some of this stuff?
Totally. So our traditional age-based plans for small employers. So if you had less than 50 employees, you kind of end up in that, traditional bucket, if you will, where, those rates have kind of followed the individual market where they're just escalating at this really fast clip. So we're seeing a lot of our small employer groups move to what's called a level funded health plan, which is self-insured for small businesses. It's kind of like taking a step back in time. Really what's happening is the health insurance company, rather just looking at everybody's age in the group and, using the insurance company's state filed rates, they're actually looking at the health of the employee population to determine an expected claim rate, if you will. And so when those plans are a good fit. Usually we're seeing reductions in premiums like 20 to 30% over the traditional fully insured alternative. So I think the statistic is now in Minnesota that like 30 or 35% of small employers are on that type of plan. And almost all of the new business that we write is a level funded product.
Interesting.
So,
okay.
Yeah. Including like at my office, there's 2 of us on the plan, and we're on a level funded plan, and it's, substantially less expensive than the traditional market.
Got it. One thing that I've always kind of wondered is, especially if like, even if you are on a Medicare plan, right, your traditional retirement age, but you travel a lot, right? You're down, maybe you're a snowbird and you're down in Arizona or Florida in the wintertime. I know I'm thinking of doing that starting in just a couple years. How does insurance travel with you? I've always been curious about that,
So if you are on an employer plan, almost always the coverage extends nationally. Almost always. There's some exceptions to that rule, but almost always you'd have national coverage on your employer plan. If you're on an individual plan, so under age 65, you don't get service, or you don't get coverage outside of your service area unless it's for an emergency. So like Chris, if you were snowbirding down in Florida right now on your plan and you wanted to go get your physical, or if you didn't have an emergency but you just weren't feeling well and you wanted to go get care, you're out of network. There's no coverage, so you pay the full cost. On Medicare, everything kind of changes again. So then you go back, and then most of our Medicare Advantage plans are going to offer national networks. And original Medicare, you can see any doctor that will accept original Medicare. There is no provider network. So you can see any, and if you're on like a supplement with your original Medicare, the supplement covers everything that the original Medicare covers. So you can literally see any doctor that you'd like to see that accepts original Medicare, which is most providers across the country.
Yeah, I was curious on how that would work. And I think going back to one of the very first things that you said, that was one of the things that really helped me determine or narrow down my selection, was who my doctor was, right? I had the same primary doctor for 23 years or something. And so I'm like, he has my history, he knows me, like it just makes so much sense to stick with him. So that's where I started. Then I started evaluating the plans that he was part of. So
right,
like you said, I think that's a win. Some people, they just don't care. They'll just see whoever. For me,
you just want the lowest. Right. For most of those people, it's all about, I just want the lowest cost plan. Right. And it doesn't matter. But there's a lot of people that, that do have a relationship with their doctor or doctors. If you have a health condition that you're treating, we talk to a lot of people about their health, and, people that have maybe like heart issues or, cancer history, all those types of things. You want to be able to see the people that are important to you.
Sure.
That you have a relationship with. So it's really important. And when you go out and you start shopping and looking at plans, a lot of them can look the same.
What do you find when people are selecting a plan? What are those things that people don't realize they're walking into? They're like, oh, this was kind of hidden in the fine print or something. Like, is there some sort of traps that people kind of fall into?
Man, I think that generally speaking, people think that insurance doesn't cover what it's supposed to, right?
Sure.
So, that probably happens more often than not. I think maybe the one thing that comes up like over and over and over again, that's maybe like a routine thing that people don't catch, is when you go in for your annual physical, and your doctor says, well, Chris, we want to do a blood panel on you just to make sure everything's good. That's not part of your preventive visit.
Oh.
That's diagnostic. So then you get a bill, you'd perceive that as, now I have this bill for my preventive care. I thought my plan covers that. And that's really, your labs are not considered preventive. It's considered diagnostic. So if there was one thing that people often are frustrated about or don't understand, that's probably one of the number one things.
Got it. That makes sense. Do you think some of the supplemental type benefits, like I know some plans offer, gym membership or something, I don't know.
Yeah.
Do you think all that is just like, I'm not trying to say that they're trying to distract you, but they're like, is it a distraction from like what the core like benefits are?
Yeah. I think that there maybe is only one plan now that offers the gym membership. They all have, a version of some way to try to, help somebody be healthier, whether that's like coupons for the grocery store or Whole Food, like that kind of stuff. But I think that those benefits are largely underutilized. People aren't paying any attention to them. So
Sure.
that's like the frills stuff that, in your fancy pamphlet, the stuff that can fill up the extra pages.
Right, right. I know that I elected to join this thing, and then I connected it with my health app on my phone. And if I got, so many steps, I would earn points, and they gamified it. And it was like, it was just so much, excuse me, just effing around. And I'm like, I didn't get any value out of it.
Yeah.
Is there like one thing that after you're working with your clients, you're working with people and you get them, into a healthcare plan that fits them, fits their family or fits their need, even if it's like Medicare, what's like the biggest aha moment for them? Like, I didn't realize this, or you helped them, because you're down to like simplifying the complex. I love that. What are some of the main things that you kind of break down in the simplest form?
Yeah, I think like I was on a call with a guy earlier today, and when you break down maybe the definitions of the plan, right? Like people don't always understand the basics. Sure. They don't understand what the deductible is or what does that mean, right? Or what is a copay and what does that mean, or what is coinsurance and what does that mean in their actual utilization.
Sure.
So like this conversation that I had with a guy earlier today, they've always been in a high deductible plan, always chose the lowest cost plan. Him and his wife had their second baby, and the wife had said, I don't think I like the copays. I want just 100% coverage after the deductible. Well, when we break that down and you realize, well, the copay is payable before your deductible, and now you can visit the doctor at $0, or if you had to see your specialist, maybe you pay $80 rather than paying $200 or $300 towards that entire office visit. That's an okay deal. So the copay is not a bad thing. The copay is a good thing.
Sure.
And so understanding, just those basic definitions and what does that mean in the plan and how that applies to somebody's life, I think is really important. And that's when you see the light bulb go off, right? And they're like, well, Mike, that would save me, the premium's like $200 left per month, but it would cost me like thousands of dollars less every year.
Sure.
If we each went a few times, that's going to save me a ton of money. It's like, yeah.
That's huge. That's huge. Yeah, and I still, even to this day, I don't really understand how coinsurance works, right?
Yeah, so coinsurance is, typically, if you looked at like your summary of benefits, you'd have things that are subject to deductible and coinsurance, right? And so what that means is your first, if my plan has a $7,500 deductible and then 50% coinsurance, that means each year I have to pay the first $7,500 in charges, that things that are subject to deductible and coinsurance. So I pay the first $7,500. Then after that's met, if I had 50% coinsurance, a bill, if I got another bill for $1,000 after my deductible, and I had 50% coinsurance, I pay $500. The plan pays $500. So you're splitting the coinsurance is where you're paying a portion and the plan's paying a portion of a charge.
They just make it so confusing. I think.
Yeah.
I think the biggest thing too is that I'll always wait until I get the bill from the provider, and then to see what actually I was. Truly, did I get billed for? Sometimes I'll even ask for like an itemized bill, because sometimes it'll just say diagnostic services, but you have no clue of what that was. Okay, well,
Right.
Let's get an itemized bill, and I make sure that is this truly what I had happen, right? And then I match up the explanation of benefits to the. I match up, the actual statement to the explanation of benefits. And if they match and the doctors are matched and stuff, then I pay the bill. But
Right.
it's And sometimes it happens weeks after the fact, and I just wish it was easier.
And I think that you hit on something that most people don't recognize, that if you were going to reconcile a bill from the provider, it should match your explanation of benefits. So if you had to pay more, if your provider's billing more than what your explanation of benefits is dictating, there's a problem somewhere. Either they're misbilling, or they're billing for something that wasn't covered. But generally speaking, those two things should match. And if they don't match, then don't just pay the bill. Reach out to somebody who can help you understand what it is that you're looking at, or talk to your provider about why they don't match.
That's awesome. Yeah, we've had some great discussions on ways that you can save on your healthcare expenses. And I've actually walked through people on how to look up the actual codes on your statement to find out what those were. Like, was that a blood draw? Was it this? Was it that? Mm-hmm. And then you also, this is a conversation for another time. But Mike, I know one thing that I'm a huge fan of is truly shopping around, even if it's covered by insurance. Mm-hmm. I had a bunch of shoulder stuff done last year. I had a few different injections, but to do that, they did a bunch of different imaging, and I could do an MRI at this clinic and it was $1,700. I could do it at this clinic and it was $900. And it's just driving like another few miles down the street. It's a bigger conversation, but I feel as though even at the individual level, if we can do whatever we can to not have them bill our insurance so much, to keep those healthcare costs down.
I totally agree. And I think one of the biggest issues or problems in our healthcare system is that there's zero transparency, because where do you go? You don't know what most providers charge.
Right.
You don't know what the allowed amounts are in your contract for your health insurance. And so, there's no standardization. When the market doesn't know what things cost, how do you create competition to drive down the cost of services? And it's one of the things that needs to be addressed, I think, in our healthcare system as a broad national, healthcare system is how do we fix this transparency issue?
Yeah, absolutely. And I want to put a couple links in the show notes that I have. There's a couple sites that you can go to get an estimate based on geography, based on where you are, if you're going to have this type of procedure done, what is the average they should be charging the insurance company? At least it gets you in the ballpark. But that's the thing, man. Like, if I go to a place and say, okay, I'm going to get this procedure done, how much would that cost? They don't know.
They don't know. Right.
They don't know.
So to your point about maybe like shopping, but also there is this like element of negotiation. So if you, like in the healthcare world, a lot of times things will be referenced in a percentage to Medicare, because Medicare is like the largest payer of claims in the, healthcare space. So when you talk about like the commercial plans, usually the commercial plans will pay like 200 to 300% of what Medicare reimburses.
Interesting. Okay.
So if you had somebody that had, catastrophic health year, there can be ways to negotiate the price down from whatever price they were charged to a percentage of Medicare, usually. And there's some health plans on the group side that will just pay, rather than having a negotiated contract, the plans will just pay 150% of whatever Medicare pays for a service. And on those plans, you'll see that the premiums come way down because they're reimbursing the doctors and hospitals so much less.
Sure. Because I'm kind of in the space, sometimes I'll have TikToks or Instagrams show up, and they'll show like, well, the cash price for this is way cheaper, right? And if you have insurance, like, they won't let you just go and pay the cash price. Is that true? Like, if I tell them,
it can be.
it
can be true.
Yeah, I don't want to use my insurance, and they're like, well, you have to.
And I think that it's, that's one of the elephants in the room, right? Like, when we don't know what things cost, but you're like, how could your cash, like, how can the cash price be less than what your insurance discounted amount is. I think that there's a transparency issue because that shouldn't happen, right? But it does right. happen. So I guess I have two thoughts there. I'll see if I can remember both of them. My first thought is that, if you said, okay, so if I go to my doctor and I just tell them you have a cold and you go to the doctor and you say, well, I'm just going to pay cash for this because I know that it's less than if I use my insurance. Technically, you could file a reimbursement claim with your insurance company. It would just apply whatever you paid towards like your deductible, or if you had a copay, it would reimburse, part of that office visit. So you could do that, right? I think the larger, where people kind of head down that path, they're like, well, if I just didn't have insurance, I'll pay cash for everything.
And there are people that do that.
Right. So my question is, well, what happens if you have the cancer diagnosis or the heart attack or stroke or the major health event? Because it can be hard to get appointments at a specialist or your cardiologist or whatever without the insurance, because that's the provider's guaranteed payment, right? So I think sometimes people forget that the insurance is what's securing your appointment. So if you had a major health event and you didn't have insurance, it could be really difficult, I think, to do maybe the care after an emergency.
Got it. No, that's good to know. I always think too, like you mentioned, like a cancer diagnosis or something catastrophic where, it's hundreds and hundreds of thousands of dollars,
Yeah.
We help families that have babies in the NICU, and you get a baby that's in the NICU for 80 days, 110 days. It's $3,000 a day just to have those babies in the
Right.
NICU. Like, are you kidding me? Sometimes it's over $1 million.
Right.
So it's like, what would you possibly do? I don't know.
Right.
But yeah, so I'm not saying that people should just go without, but I'm like, there's got to be ways that we can collectively as a society bring this stuff down.
Figure it out. Yeah. Figure it out and do better. Agreed.
Yeah. I think that always
1000%.
happens with medications too. Like how you were saying how the discounted price insurance, right? Because I've heard like some like independently owned pharmacies, if they're not going through big pharma, they can get you the same med a lot less expensive than if they were going to charge the insurance company for the same medication.
Yeah.
So, yeah. Like I said, that's a much bigger discussion.
Mm-hmm. Right. And the government's involved in a lot of that at some level too, right? Mm-hmm. That they're negotiating with manufacturers, and now in Medicare, they've got these listed drugs that will be, they're focused on reducing costs for, we're a capitalist society. So there's a profit center in all of the things, right? Both on the care delivery side, on the insurance side, every piece of that, there's a profit center. So, I think that there's a lot of bloat and fraud, waste and abuse in our healthcare system, that there's a lot of things that we're probably spending money on as a society that we really shouldn't be, that are inflating our costs as well.
Sure, absolutely. I would really like those listeners or people watching on YouTube, if there's some like key takeaway that you want them to leave with today. Maybe it's about, I know things get crazy and it changes all the time, but what advice would you give them?
Yeah. I think maybe a couple of things. I think first I would say take a few minutes every year to like review your plan and make sure that it fits your needs. And I think people that you maybe utilize, that go to the doctor more often than not, are maybe more prone to at least reviewing their insurance, but definitely take a few minutes to look every year. Now's the time, right? If you buy your own insurance, or a lot of employer plans, Medicare's happening right now. So now's the time for most people to look at your plan and make sure that what you're doing for the next year is adequate for yourself or your family. And then I'd say leverage the advice of a professional, right? You don't pay any more or less when you're working with a broker. Find somebody that's local to you in your area. Depending on where you're at, there's a lot of resources to find a good broker. If you had a listener that was outside of Minnesota, I'd tell them to go to nabip.org. NABIP.org. That's the NABIP.org, National Association of Benefit and Insurance Professionals. They've got a agent finder on there. Those are the people that are highly engaged in their profession. So I'd be confident that if somebody needed to find a broker, if you're in Minnesota, call me. Shameless plug, but find somebody locally or go to nabip.org and look for a broker there. And you don't pay any more or less for the broker. So I'd say leverage the advice of a professional and don't take on the burden of trying to figure out all your doctors and your meds and all that stuff on your own. Use somebody that does it for a living, and then you just have to focus on what really matters.
That's awesome. Yeah, and I think you should go ahead and let people know where they can find you or get more information about what you do.
Yeah, right on. Probably the best place to get a hold of me is our website, andersonbenefitpartners.com. We work in really three main market segments. So employer benefits, under age 65, if you have to buy your own health insurance, then we also serve the senior community or Medicare eligible people.
Well, let's say I have my current coverage that I have right now in 2025 and I don't do anything.
Yeah.
What happens?
Well, that's a good question. A lot of times it will automatically renew, but not always. So if you're on the exchange, MNsure or healthcare.gov plans can do weird stuff. Sometimes if you're on the cusp for eligibility between like a public program and a tax credit, they may push you to the county or the state for information, so you might not automatically renew. Almost always you do, but not always. So I would say if you are buying your own insurance, log into wherever you get your insurance from or log into MNsure and make sure that you have a new plan for the next year in there. Or if you work with an agent or broker, reach out to them and ask them to confirm your enrollment for the next year.
Oh, that's great advice. And I know it's just recently, because I was going through a lot of my stuff and I wanted to look up some EOBs, and I logged into my Medica portal. It wouldn't let me go anywhere without selecting the plan, like select what I had or do this other thing. Mm-hmm. And I'm like, well, I don't know yet. I haven't really evaluated them. And I'm like, I'm stuck. Their website literally was stopping me. Anyway, That was funny. Mike, thank you so much for your time today. I really do appreciate it. Thank you, everyone, for listening and following along. Please like, subscribe, and share with someone that you think would find value. Again, health insurance, man. Choosing a healthcare plan doesn't have to suck. We'll see you next time on the Extreme Personal Finance Show.
Coming back to me, Chris? Do you want to see my plant, Chris? I'll show you my plant. This is Steve. This is Steve. He's my money tree. When I got Steve, he was a little itty bitty tyke. He came from Target, and now he has moved one office with me, and he's much larger than what he was when he was very small, because he's a big money tree now. He got repotted, so he's in a different pot now than he was before. Hey, Chris, you're back. I don't know if it kept recording, so I was like, well, I'm just going to do weird stuff